some little bit of setup that needs to happen. So sorry. Please forgive us. But it's just the nature of it. Are we live?
We are live.
We're live. So I'm not finding anybody. Oh, there it is. Yes. What's going on, everyone?
Hello.
So I'm not finding anybody. Oh, there it is. Want to listen and watch and listen and watch. Turn that down. So. Cheers.
Cheers. Welcome. Hope you have your glasses. Oh, they're not cheersing me because I'm sick. So,
Yeah, we're kind of.
Stay away.
I know.
Stay away. So today's topic is terms that you should probably know if you are in a real estate transaction or real estate frame of mind.
Absolutely.
Don't know that there's going to be any comments, maybe questions asked. We don't have a raffle this time because we're not sure when anybody is going to say or ask. So, we figured we'd save that for next week. It's a surprise. Little bait.
Bada bing, bada boom.
Cast it out.
Yes.
Really in for next week. Anyway, so, first-time home buyers, seasoned home buyers, sellers, there is just stuff that is never going to change with a transaction. And we have 10 words here that would be along those lines. So, anyone want to say the first one? Number one is?
Offer.
Offer. Say offer.
Offer.
What is an offer?
What is an offer?
Well, you got to start somewhere when you're buying a house. So it's your first step. I mean, you've looked around, you've shopped. Now what do? You offer.
You make that offer, and with the help of your real estate agent, hopefully, you will make a very good offer that will be getting accepted by the seller.
Right. So how do you make an offer, though? What's entailed in making it?
Well,
Such pressure when you ask me a question. What's he going for? What's the answer?
well, it's more than price.
It's all the terms.
Why are you looking at me?
So you have to have all your terms. You outline them from the beginning, right?
Right.
You got your price, when you're going to take possession of the house, all the contract terms, when you're going to close by, your
Any home warranty.
financing, your warranties, all those things are spelled out in a standard contract that we use as Central Ohio Realtors.
Yes.
And so when you write an offer, it's not just price. There's a lot more to it. It's actually a 10 to 13 page document that we put together, and it is sanctioned by the Board of Realtors and written by attorneys. So,
Right.
and it's what we're allowed to use when we submit offers for you. So your offer is just that. It's the beginning part of this. So when you make an offer, what might happen though?
Well, the first thing you could have are various contingencies, right?
Yes, you can. And but that's going to lead into word number 2. First, we don't want to rush it, but there are contingencies, and we'll define that in a second. But there can be terms in your offer that the seller doesn't accept. So there can be then a counter offer.
Yes, that's another good term.
Is that what you were going for?
And I was.
Okay. Ding, ding, ding.
Nailed it.
Yeah, so a counteroffer is going to be either the terms, it's the terms that the seller doesn't accept for your offer. So it may be price, it may be a contingency that you put in there. It could be that they don't want to, I don't know,
they don't like your price.
They don't like your price, they don't like what you're asking for, they don't want to give you a home warranty. There can be a lot of things in there.
That 70s chandelier that's in the kitchen that they really thought, thought I can live without that, but to them it was this priceless heirloom.
Right.
So they want to exclude it from the sale, so they countered
Right.
that they're going to take that.
Yeah.
Exactly.
And you're like, excellent.
Now that chandelier is gone.
So the offer then gets mulled out through these counter offers. Either your first offer can be accepted, or there's going to be a counter offer and another counter offer and another counter offer and another counter offer and another one.
Yeah,
and
this
another.
could go on.
It could go on. It can go on. Yeah, until the offer is then accepted.
Yes.
So when you counter offer, for instance, if you're a seller, know that you've now canceled the original offer. That offer in your mind or in anyone's mind no longer exists.
Right.
So think carefully before, as a seller, you counter to make sure that's what you want to do.
Mm-hmm.
Because once you've countered the offer, that original offer is off the table.
Mm-hmm.
You have made a new offer that changes terms of the original offer. So it's important clarification.
Yeah, because these terms do go for both buyer and seller. So
Right.
yeah, there's a different side to each one of them. So
Yep.
yeah.
And at no point in time does either side have to respond to an offer. So either the seller can just not respond to the buyer's initial offer, or the buyer can choose to not respond to the seller's counteroffer, and then it's dead.
Yep. And in this market, sellers are not really negotiating too far from their price because there is not a lot for sale. And so say you offer 10% below, which 3 or 4 years ago you might have gotten away with. But probably in today's market, you're probably not going to get that. So expect a counter offer in that instance. So.
Yeah. So TJ mentioned the term contingencies. That's number 2 on our list. So you want to take it away with the contingencies?
Sure. Once the offer is accepted, there are certain times and ways that the offer could still die throughout the process, like a satisfactory home inspection is a great contingency. We're good with the offer provided that X happens. So whether it's your home inspection, whether it's getting timely title commitments, closing dates, all of those things are different stops in the process. Financing is a huge one. All of those that could kill the deal.
Yep. So you have to cover yourself when you write your offer.
Right.
So if when your bank gives you your pre-approval letter, it is a commitment by the bank that based upon the terms that they initially reviewed.
Your buzzing.
It's me. I'll call you back later, Sean. So he's obviously not watching on Wednesday.
Sean, it's 3 o'clock
Darn it,
Wednesday.
Sean.
Hello?
Right, bye, Sean.
What are you doing? You could write a question in here,
Yes.
and he'll answer.
I probably won't answer still, but
Maybe.
you've got to cover yourself. So your lender hasn't really dived into your entire financial situation at that moment, and they're going to take just about everything except for your DNA when it comes to finally giving your final loan commitment and approval to close. So until that moment has happened, you want to have a contingency in there because otherwise you're causing the seller, another term, damages. So that's not one on our list, but anything you do to harm another would be considered a damage, which you could be legally liable for. So, obviously we're not attorneys, and in that situation we would turn you over to an attorney.
Yes.
But in any case, by building these contingencies into your contract, you mitigate your risk and limit potential damages. So.
Yeah, so it's important to know there are contingencies that can kill the deal once you're in contract, but you can also write contingencies into your offer. So, you'll purchase the home, but dependent on certain things happening. A big one, I think, would be a home sale contingency. So, if you want to purchase a home, but it's dependent on your house selling, that would be what a home sale contingency is.
Or from a seller's perspective on them buying a new home.
Right. Yeah, and that's a big thing right now with the seller's market we have going on is a lot of offers are accepted, but it's contingent upon the seller finding suitable housing.
And that's one reason a lot of sellers aren't listing right now because they are afraid to get into a contract and not be able to get out of it. So we've got ways to protect you.
Right.
Absolutely.
Which
So
would be
if you want to
that
sell,
contingency.
now's the time, people. You don't want to wait till we say, well, you should have done it.
Because that'll happen.
Yes.
But anyways, so, all right, what's our next one?
All right, so number 3 on our list is closing costs. That's always a very confusing term, I think, because it gets intermingled with a couple of different things. So it can't. It's a few things. It is what the lender's going to charge you, because borrowing money costs money, and different banks charge different fees. So you may have higher fees with one lender, less fees with another. When you're writing your offer, it had been very common for buyers to ask the sellers to help pay closing costs, and that's the portion that they were helping to pay, was the lender fees.
Right.
So it's also, there are taxes that need to be paid on the seller side, and there are also
Title fees.
and
And recording fees, which we'll get to
recording
later.
fees. Yeah.
Government, any other government fees? You know, TJ knows all about those.
I do. If you have questions
Does
about
anybody
government
want
fees,
to
let me know.
guess why? Some of our viewers may not know. He's very well versed in that
Yes.
kind of
I am.
stuff.
So, but yeah, so you know, it's always, I think, best if you want to know how much your closing costs are, is talk to your lender. I think your lender can give you a very close estimate, you know, based on all the things that we just mentioned. They can estimate those things, so you know how much you're going to end up paying, because you ultimately need to know how much cash is going to come out of your pocket, and you need to make sure you have enough cash, you know, when you get to the closing table. So, you know, having an estimate is important, because if you need the cash, you know, we can write, as Jenny said, you know, we can write that into the offer, and help seller to pay. And you know, sometimes there's different strategies with that involved too, because in a seller's market, you know, they're not eager to go below their price, but we can do things.
And it's not something they have to do. The seller
Right.
has to agree to do that. And I think that sometimes people get confused that the seller has to pay closing costs. They don't.
No.
Um,
And ultimately, the seller's going to look at their net. You know,
Right.
how much money at the end of the day am I going to leave with when I sell you my house? And so, you know, people get confused with closing costs when the seller's paying closing costs, how it really works. So
Right.
if you throw numbers out there, you know, you're paying $100,000 for the house. Your closing costs are $3,000, and you want the seller to pay your closing costs. So you offer $100,000. You ask the seller to pay $3,000 in closing costs. You're really only paying the seller for the house $97,000,
Right.
Because
that money
They're
comes out
taking-
of their net, which is
yeah, that's exactly right. The seller is paying it for you instead of you paying it. So, you know, understand that when you offer and you do that, you are weakening your offer.
Right.
And if you're in a competitive situation and your agent tells you, you know, this is going to be a multiple offer situation, more than likely, you want to be strong in your offer. And if you can afford to pay closing costs,
do it.
you know, it's going to help strengthen you. So
Yeah.
Absolutely.
next,
You want to take it?
Go for
Earnest
it.
I'll do it. Earnest money.
Earnest money. We're so excited about earnest money.
So earnest money, I find, and I don't know about you, this is again one of those things that a lot of people aren't familiar with on the sell side or the buy side, quite frankly. Earnest money, in my opinion, is kind of an old-fashioned term. I mean, it's been around a long time, and it's one of those things that people don't tend to understand how it works or what it is or why you do it. But as far as the sell side, it's really one of the protections that the seller has with the offer. You know, well, as far as the buy side, it is a good faith show on your part that you're serious about purchasing the home, and the amount can vary. I know different states have different. Would it even be rules as far as? I mean, I know sometimes it's a percentage of the purchase, but here, how do you guys handle earnest money? Like,
so there's no set, you
Right.
know, and we can't even. I think we can't even say this is how much is standard.
Right.
Right.
However, you know, if I would say normal under a $200,000 house is probably $500.
Right.
Under $200,000.
Yeah.
You get over
2,000.
$200,000, you know, then you get up to maybe
You try about
$1,000, and if you
higher
get into $500,000 or more, you know, then you're, you know, because ultimately you want if you're going to put up earnest money, and it's still pretty common that people do,
yes,
you want the buyer or the seller to believe you are serious about what you're doing. If you're offering on a $500,000 house and you're going to put $500 in earnest money, it's really not showing anything. And the reason why is when you get into higher price, we go back to the term damages. If you cause harm to the seller in any way during the course of this transaction, they can use your earnest money as what you could say mitigated damages. So the seller could say, all right, at this point we will let you out of this contract, but we want your earnest money. And if you give us your earnest money, you both sign this mutual release, the earnest money goes to the seller, and you've both agreed neither's going to sue the other one for what has happened. Regardless of what it was, if that document is signed. So, offering $500 on a $500,000 house, when they've got taxes that are probably $12,000 or more a year that they're paying, and they've got a mortgage probably and insurance and all these other expenses, $500 isn't going to go far in covering any damages that might have been caused.
Right.
So in the end, the earnest money is, as Jenny said, your good faith deposit that you're going to go through with the contract and that you're serious. Having that been said, earnest money is starting to somewhat fall out of favor because it is somewhat difficult for a seller to claim your earnest money. Some quick ways that you can lose it is not follow dates in the contract. Dates are highly important. You'll see the term time is of the essence. So you miss a date in your contract, you very well may, the seller may be entitled to your earnest money. But a lot of times what happens is this has to be litigated. You're going to have to hire attorneys. It's going to have to either go to court.
Right.
And a lot of times, it's going to cost you more in attorney. If you put down $1,000 earnest money deposit and that's what you're fighting over, guess what? In 3 hours of an attorney's time, you've already spent more than you put down as earnest money. So, a lot of times what happens in a dispute is it sits in a broker's trust account for a couple of years, and it go to unclaimed funds, and then after a few years it goes back to the buyer. Now, it is something to take serious if you do put up an earnest deposit, because you can lose it. But again, your contingencies protect you in the contract. And as long as you follow, this is what I tell all my buyers, is that as long as you follow the terms in the contract, and that means you follow the dates, you follow everything you agreed to, and you stay within those terms, you'll get your earnest money back as a credit, at closing.
Right.
But you've got to follow the contract.
Right. And I think the misconception with earnest money that oftentimes people have is that it's money that goes to the seller automatically. You're writing a check and it's money that the seller is going to keep. And it's not. It's a little bit more complicated, obviously, as Wayne has laid out.
And I've been in the business for almost 10 years, and I've had one instance where the money actually went to the seller.
So typically what would happen
two instances.
As long as you as Wayne said, you follow all the dates and you get to closing and everything's good, that money does get written back to you in a check when you're the buyer, and you can either put it toward your down payment or back into your checking account.
Right. And it depends on your lender too with that. Some lenders are requiring that you sign it over to the title company, but it just ultimately lessens how much cash. It all comes out in the wash as they
Exactly.
But that money does get deposited, so when you write that check, and different people, have different timelines. I know I usually write it to be collected after inspections are done.
Right.
But some people do collect it immediately. But that is out-of-pocket cash that will, it gets deposited into a non-interest bearing account held by either a title company or the buy or sell broker. And, it does get cashed.
Yeah. So we're going to cash that check.
And, it's a serious instance too.
Yes.
If you bounce your earnest check, we must notify the seller that you bounced it, and that could be grounds for the seller to terminate your contract.
Right.
So it all sounds scary. In the end, it's not so much. So we make it sound, we're kind of throwing the terms out and giving you the potential pitfalls, but ultimately it ends up not really being that big of a deal.
Right.
Usually.
Right. So. Typically, but there's always that time.
Yeah.
So number 5 on the list, home inspection.
Yes.
So
with a home inspection, you want to bring in someone who's qualified to look through the home, to look for any potential issues that there could be. You're talking structural, you're talking mechanics, outlets, plumbing, everything, because it's their job to let you know of any potential problems there could be with that home. And then at that point, the buyer and seller are going to come to an agreement about whether or not any of these items are fixed prior to closing. Because the buyer needs to have a satisfactory home for them to move into.
And this is a contingency.
Yes.
So these terms, as you're going to notice here, are going to come full circle.
Yes, they do.
Because they all tie in with one another. So, you write into your original offer a home inspection contingency. See? See what I did there? You like that?
I do. I'm a fan. I am.
So you write that into your contract, and you protect yourself. So you find out, in your home inspection that, the electric's not up to snuff, or the foundation, isn't what you would hope for. And then you have the contingency to either ask for the seller to fix it, say to the seller, we're just not satisfied with the condition, and we're just gonna go our separate ways. And because it was a contingency, you can do that. And then if you had earnest money, you get your earnest money back, as long as it was within your inspection
Within the terms and
period.
within the inspection period.
So, these things again are all there to protect you, and
Right.
that's the important thing to note is people get scared, when they write an offer, because it's a big commitment. See now,
Do it again.
Jimmy,
No pressure though.
because then you don't have to pay your closing costs.
Oh! Just wait till we get
At the end, we're gonna say one long sentence with that. Maybe.
But because you're making a big commitment in the beginning.
Yeah.
Right.
So you put these things in there to protect yourself again. So.
Yes, and important to note that when it comes to the inspection, when it's over, we write what's called the request to remedy, and on the buy side. So that gets sent to the seller. That then gets negotiated. The seller does not have to make repairs if they don't.
And in this
Yeah,
market,
they
they're
don't have
probably
to.
less welcome
Yeah,
because
so-
they probably have a backup offer, which
Mhm.
is another term not on our list, but they may have other offers in the waiting that if for some reason your contract falls through,
Right.
then they've got someone else waiting. In this market, buyers are feeling a little bit shortchanged in all of this because they're not ending up
Not a
getting
whole lot of negotiation going.
a lot of some stuff that they want.
Mhm.
But when the pendulum has swung so far to be a seller's market, sellers can do that. So just know in all of this, it's an option on the seller side. Just because you ask doesn't mean you're going to get it. And as your agent, we're certainly going to fight for you
Right.
to get what you want.
Yeah.
And on the seller side, though, you've disclosed a defect in the home, and now they need to disclose that defect to other potential buyers. So that's a
Right.
point of leverage you may have
Mhm.
in some situations
Right.
to get this to work out in your
Right.
favor. If you just fix it now, you move on with our contract, everybody ends up happy.
Mhm.
So, but a good agent will get you through it. So
2,
3 because they can.
and the rest of them.
Yeah. So anyway, I think we killed home inspection. So,
We did.
So each one of these terms we could really talk about a lot. There's a lot to talk about.
Yeah.
So number 6 on the list. A couple weeks ago we covered pretty in depth the title.
And why is title important?
Well, title is going to let you know who has what rights to the property and whether or not you can get a free and clear title, meaning that when you buy the property, you own it without any encumbrances or walls, I would say, against your rights to do what you want to that property. And it's important that you get a free and clear title because a lender is not going to lend to you if there's someone else that has a claim on that property that isn't going to be resolved.
They won't.
Not a lender.
They won't.
You can pay cash, but I wouldn't advise it.
Yeah. Yeah, that's a whole nother can of worms, huh?
So basically, there's lots of liens that can be placed against a, lien isn't necessarily the correct term, but it could be a lien, it could be, somebody else has legal rights to ownership over the house. So your title company, for instance, World Class Title, who was with us, a few weeks ago,
Yes.
a couple weeks ago, explained all of these things very well. But you want to make sure that you have full and clear ownership on a property. So your title company is going to do a thorough search to determine that there's whether or not there are other claims to your property by someone else, and at that point, then assuming that all is good, then you move forward, and then your title company, paid by the seller, will issue a standard Columbus contract. The seller will pay for an owner's title policy, which would cover you in the instance that something wasn't found in that title search, comes back later, to again mitigate your damages in that instance. It's not terribly common, but it can happen. And again, it's another thing. One other thing that's built into our contract that's very artfully written to help you and to keep you out of a bad situation. So.
And as we're talking about title, I think that, there are experts in each one of these things, be it a lender, be it a title person, be it a real estate agent. And if you have further questions regarding any of the words, terms, topics that we cover, we have covered a lot over the weeks that we've been doing this, and we can send you the link to watch, one of our other videos if it's a topic we've covered, or, we're happy to answer any questions anyway. So feel free to type them in or PM
Type it
us
now, message
or
us.
text, call anytime.
We're on all the social media, so
Yes.
whatever way you want to contact us, you'll find us.
And it may turn into a future Wine Wednesday.
Yeah.
Yeah, well, there's that too. We'll cover that at the end. So, number 7 on the list,
It's a hot one.
It's a hot button right now because of the seller's market we're having, and we can explain further why. But the word is appraisal.
Wayne?
Ooh, okay.
Appraisal. Take another drink first. On both sides, buy and sell. It's
So in a seller's market, prices have pushed upwards. When you offer on a house, a lot of times your people are going over asking price, are just throwing numbers out there because they want it that bad, and there's that other many people who want it. So. For instance, we recently, as our brokerage, had a listing recently that sold for $100,000 over its list price. So, in a typical situation where a bank is lending on a property like that, a bank is going to require an appraisal to be done to protect themselves, to make sure that what they are lending on, they can potentially get back in the case of a default, where you no longer pay your payments. So, if your house is, again, $100,000, and then the appraisal comes in at $90,000, then you've got, a discrepancy. So the appraisal is a snapshot of the fair market value at that moment, is the short definition of the term. I sense a thought.
No. All I was going to say was what's important to note in what he just said. The discrepancy is that the bank is only going to lend on what the appraisal comes in for.
Yes.
So take it.
Very, 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 very important to know. So again, the definition of the term really is the fair market value, actually the market value of that house at that moment in time is the appraised value. And that's going to be sourced from your lender. Your lender's going to order the appraisal. They're going to send someone to the house who's going to look inside and out.
Third party, so it's not someone that the lender's talking to. It's another entity altogether that we don't talk to them either.
So they are going to come in and they're going to look at comps in a neighborhood. They're going to look at the condition of the home and how it compares to those comps, and then assess the value to that property. And then based on that number is what the bank is going to lend. So in the instance that I use as an example, if the appraisal came back at $90,000, they're only going to lend off of $90,000. And at that moment, what are your options?
3, in my opinion, from what I know. You can either pay the $100,000, in which case $10,000 is going to come out of pocket. Extra, yeah, $10,000 cash extra.
So if you were in that $100,000 purchase, you were coming to the table with 10% or $10,000. Now, if you want to make up the difference, you're going to have to come up with $20,000 in cash,
Right.
rather than the 10, if you wish to continue using this scenario.
Right. The other, number two, it would be that you could negotiate with the seller the difference. So, easiest way to say it is meet in the middle.
Yeah.
So the seller would lose some of the net, and then as the buyer, you would bring some out of pocket to
Yes.
cover the difference.
Yes.
If there is no agreement to be made at all, then the contract would
Be dead.
Terminate.
disappear.
Because there is an
Now-
appraisal contingency.
So along those lines, though, so it is important that your agent writes an actual appraisal, because in
Yes.
the old Board of Realtors, we say old, there's two versions of the contract out there that an agent may or may not use. The old contract does not have an appraisal contingency in it. So a lot of times what happens in this scenario is a financing contingency, because if you don't have the extra 10 grand, we use in our example, then you can't get your financing.
Right.
And then at that price, it doesn't work. Now, if the seller, say for instance your agent provided your lender a pre-approval letter or something, for more, perhaps your buyer can still get the loan, and perhaps there's additional cash. So it isn't necessarily always a financing contingency. You do have to be somewhat careful of that, because it's hard for someone to prove, I believe. But in any case, having an appraisal contingency written into the contract, which again is not part of the previous or the older version of the contract, but I believe is part of the new one. Make sure that contingency is in there. And you will find in this market that a lot of people are just foregoing an appraisal contingency because they want the house that bad, they're willing to make up a certain amount of dollars in between. So know that as a buyer, you may be also competing with that amongst other things. So,
And I had that as a buy side. The seller, there were multiple offers, and a couple of them were pretty close in the terms and contingencies that were being offered. And the seller said, if you can make up the difference, if the house doesn't appraise and you are willing to pay the difference in cash out of pocket at the end, then we will choose your offer. So
Yeah.
it's,
Yep. So lots of things to consider, and this is one of the many reasons why buying without an agent, just a bad
or
idea.
selling.
Yeah.
Yeah, I mean selling
Big thing,
too,
yeah.
because unless you do these things all the times, how in the world would you ever know this?
Well,
All of this.
I think if you were selling on your own, how are you going? Yeah, I mean, as far as the appraisal, how do you know what is fair market value? How are you going to find the comparables? How are you going to argue
How do you
that?
know you're
I mean,
selling at the right price?
Well, and if
Yeah.
you're buying,
Well-
how do you know that you're using a contract that's going to cover all your bases?
Yeah.
Right, and that is a copyrighted contract.
Right.
So,
Yeah, so what you download online, I mean, it's not the
Right.
same.
I mean, I
It just
saw
isn't-
a for sale by owner listing on Zillow that said contract available. What contract and who wrote that contract?
I'd be a little nervous,
I would
and I
be
think
too.
that. Well, anyway, that maybe is
Yeah.
another one Wednesday topic.
So you see on your neighborhood for sale site, and then you decide you're gonna buy or sell on your own. Well, you're really opening yourself up to some potential problems. And I think all of us have been in this for a while. So I don't know that I certainly haven't seen it all, but I've seen
Yeah.
a lot. And just don't take the risk. It's not worth it to save a few
No.
$1,000 because in the end,
It doesn't save you.
calculate how much money you're saving in attorney's fees and potential damages again to someone else, and then you really could really harm yourself. So.
Just real quick on
And
that.
then there's not enough wine in the world.
There's not.
When it gets to that point, there's just not enough wine. So,
But on that note, I think one thing that's important that distinguishes 43 Homes from other companies is that we all talk with each other, and we're a good resource for each other. So I may not have seen something that Jenny's seen, or vice versa, or another agent in the office, and we're not trying to trample over each other, which
Right.
is stuff that you see in other brokerages.
Yeah.
Like we really do work well together.
And we have internal methods of communication where we're talking. I mean, obviously, if we're on opposite sides of a transaction, you know, that doesn't happen. But in any case, when it's appropriate, we are certainly, if people have questions, you know, I'm the broker, and, you know, Jenny and TJ and the other agents, you know, work directly with me. And then also, as TJ was saying, you know, we're bouncing ideas off of each other. Well, how can we make this work? How can we do the right thing in this scenario? And I'm proud of the agents we have, and that people are able to do that here.
I think that it's you know, there's a lot of different ways to negotiate through things, and it's, you know, one of the things that I've learned in my experience in this business is that every single transaction, and you know, I've had about 30 a year, so you know that gets to be quite a few, but there's been something different every single time. Every single time, I can't even tell you.
I have to say, so my niece is on here. I have to say hello. She's learning at a young age. Hi, Alexandria. How are you?
What's up?
She was on a family cruise with us recently. And
She's not having one.
No. You better not be. But I just wanted to say hi.
Shout out.
Anyways, I'm sorry.
No, you're fine. Totally. Good.
So are we on to insurance?
We are
Yes.
on to number 8, which is insurance, which may seem pretty self-explanatory, I suppose. But it's one of those things that I think buyers don't realize that it's something they have to find, and it's homeowners insurance.
And there's lots of different types of insurance in the course of buying a home. So, you know, you mentioned one, homeowners insurance.
Flood insurance.
Yes, and whether or not that's required, make sure you understand from the beginning if flood insurance is required, and you can find that on your government websites, and TJ can tell you exactly where. Why don't you do that? I'm putting you on the spot.
It's okay, he's had some wine. He can help roll with this.
I mean,
Back to you.
there are.
As soon as I said that, I'm like, God, I hope he knows.
No,
Look how ready.
there are a variety of.
And now I'm ready.
Mainly looking at the city or the municipality in which you're buying, or other sorts of requirements for the area that you're living. But we can go over government documents in great
Where's
detail.
that
in
light?
future
The
ones.
spotlight that
I'm
we
sorry.
got.
I got really hot all of a sudden. No, so, but, you know, and why it's important to know from the beginning is it can be very expensive. And in some cases, if you're buying, you know, $100,000 property, it can be close to what your mortgage payment is going to be. So,
Well, here's the thing too, right? And I don't know. I'm sorry to interrupt, but Central Ohio, there's not a whole lot of water, right? I mean, there's a couple rivers, but that's really about it, and maybe some puddles here and there. But surprisingly, there are areas that you wouldn't expect that are flood insurance is required, and specifically, I think of Grove City, and I mention that all the time
and I
because
believe Independence Village out
Yeah.
on the east side, we had a few transactions in that neighborhood. One that worked out because it was a cash buyer. And they opted not to pay for the flood insurance,
Yeah.
which I don't know if that's a good idea or not. But we've also had deals fall apart because
because
people
it's so
didn't realize
costly,
in the beginning.
as
And
you were
then
saying, yeah.
people wait and then they figure out how much it costs, and the point in all of this is, especially if you're buying an older home, shop for your homeowner's insurance early. Don't wait until 10 days before closing, because your
Not that
lender,
you do that.
no one would do that.
No.
It just never happened.
Never ran into that.
And your agent will be all over you to make sure you're doing it. But in any case, your lender's going to want proof that you
Right.
have homeowners insurance, or they're not going to lend on the house for you. So in any case, make sure you have it and make sure you get it early. And the reason I say older homes is there are things within older homes that insurers don't necessarily like. Knob and tube wiring being one of them, and some insurers just will not insure if that is still in the house. And then if you waited to find out or waited to find your insurance, and you're after your inspection, well, you've run out of contingencies, so
Right.
find it early, find your issues early, and your agent will know what to look for in your inspection. But just err on the side of caution.
But shop around.
Yes.
Don't
Yeah.
just call one insurance company.
Like any insurance. I mean,
Right.
car insurance, you call every couple of years, a new, so yeah, shop.
And a lot of insurers can sell multiple brokerages. So talk to an insurance broker or someone that
Right.
can do that shopping for you. So I see Alexandria commented. I can't read it this far, but
Did you have it on one of your other?
Oh, yeah, it's right there.
Nate's got
Oh,
three
there it
screens going right now.
You did that.
yeah, she says we'll talk later, girl. Okay.
About what?
I don't know.
Want to be in on it.
I'll tell you later.
Yeah, what?
I got a funny nickname on the family cruise.
All right.
And?
All right, so I had a little too much wine one night, and I was drunk all waiting.
No.
Yeah.
Oh.
No.
So Alexandria coined the term. There you go.
right.
I'm
That's
drunk
funny.
all waiting.
Cheers.
Wine Wednesday.
Wine Wednesday.
Here, don't cheers. There we go.
Wine Wednesday.
Just-
Sorry.
So do you want
We
to
didn't
get to the easy parts? I'll take
Okay.
number 10 if someone else takes number 9.
Well, 2 left. So number 9 is signing. We talk about signing and closing, kind of hand in hand. So I don't know. Again, some of the stuff seems like it may be self-explanatory, but I don't know. It just isn't, and it's a term that maybe people don't know. And signing is what you do at the very end, and when all the bells and whistles are happening and the wine and the champagne gets cracked and like in our conference room we're going to have streamers and balloon drop.
We are closing is so anticlimactic, but when you close with 43 homes, we're going to make it
We're going to
special.
make
Oh,
it
yeah.
special.
We're going to celebrate.
We'll either have wine or champagne or sparkling if you prefer not to have the alcohol.
No,
I won't judge you.
it's not what it's
But no, so that's when it becomes yours, right?
That's when it becomes yours at the signing. Yeah, the closing.
And you are homeowner at that moment.
Yes.
You own your home for all that's wonderful in the world about home ownership.
And to be fair, the seller has a lot less to sign than the buyer. So if you're on the buy side, be prepared. Sometimes I've seen a stack like
Unless
this
you're
of
paying
paper
cash.
work, yeah. That unless it's cash, in which case there's not that much to sign.
But if you've got a loan, bring a
Dependent.
well-stocked ink pen.
Yeah,
It actually
right.
will
Depending on the
provide
bank or the lender. Sometimes some lenders require more than others, so that's a whole nother thing. So, and number 10, the final and last, really our center person here is the expert on this, and the term, would you even like to say the term? The term is,
Recording. Sorry, I forgot about the drum rolls. Recording is where certain documents that you've signed are put on the public record in order to notify everybody who owns the house and what obligations are on there. Mainly, what the title company is going to record is going to be first the mortgage release from the seller if they still had a mortgage, then the deed or the transfer of the property from the seller to the buyer, and then your mortgage. And they're going to be recorded in that order because the order is very important. Because in Ohio, it's sort of a race to the courthouse. So the documents take priority in the order in which they're filed, and I could go on and on about recording for years and years.
you really could.
However, one thing
won't let
to
them
know,
know.
one thing to know is even if it's not recorded, you still own the home. There is no legal requirement for ownership in the state of Ohio that deed actually be recorded. Once it's been signed and notarized, you own the house.
Yes. At that
But you
moment.
do want it recorded,
Yes.
because otherwise you could cloud the title.
Yes, and that all goes back to the chain of ownership and the chain of title, because you want to show, that it transferred from one to the other, right? But yeah, it's actually kind of fun. If you go on to the recorder's website, you can look up not only yours; it's all public record. You can look up, a house you're interested in buying. You can go see, what's been recorded for that property. You can go look and see, your past documents. For instance, I'm a dork this way, but my mother passed in '03, God rest her soul. But I was looking back through my parents' past ownership records, and it was kind of cool just to go back through and there's her signature, and there's all those things in there, and it's just kind of like a little historical record. Well, it's not a little; it's a huge historical record, for
Predating the state of Ohio.
Yeah.
Central Ohio, the records.
It's
predate the
amazing.
state.
Like the house I just purchased was built in 1865, and you can go back and pretty much find records all the way back that far. I sold a commercial property back that far, and it was all there. So it truly is an amazing system, and it's one of the things that you're. Oh, here we go again.
It's not Sean this time.
Yeah, it's. Oh, I answered.
Hi.
Hi.
Call you back.
But it's important for an agent
Yeah. Hey, can I?
to realize that something can get recorded during the process too, which can really gum up the works. I was helping someone research a property recently, and for the buy side, and what I noticed was that after listing, someone had recorded a previous purchase agreement, which could gum up the works and create problems. So that's why it's important to look at the documents that were recorded. But always trust the title company to do that professional search.
Yes.
But doing a cursory search can be very helpful and can provide a lot of knowledge, including being able to estimate how much somebody owes on their house.
Right. Which, in a buyer's market, used to be more important. Back a few years ago, when so many people were underwater, on their mortgage, just because the underwater, meaning they owed more than the house was worth. And back even just a couple years ago, there were so many of those instances because home prices had dipped so far.
Right.
And even now, knowing have they dug themselves out, because a lot of times people will price according to what they want to net at closing, not necessarily what the home is worth, and it can be valuable information to know. So.
Well, we've covered all our terms.
We
I guess it's time to wrap it up.
I feel like, what was at the end of Romper Room? Didn't they sing a song about goodbye?
I don't remember how it goes, but yeah.
I don't sing, but if I look at my magic phone, today I've seen Josh, and Taylor, and Lacey, and Joe.
I've got to see
Andrea and Chad and Mike.
So we always appreciate you
And
guys
there's Mike
watching.
stopping in at the end. Hey, Mike.
So yes, we do appreciate everybody tuning in, and people when we see you bringing up the Wine Wednesday, because we don't always realize everybody that sees this. So
Is that good or bad?
I know, right? So, but again, for all of us, I just want to say thank you. We'll be back again next week.
Next
And I
week,
think
3 o'clock.
I think on location next week, so you have to tune in next week and see.
And with a raffle.
Yes.
So
Yeah.
again,
Yeah.
cast it out. We're gonna reel
Reel
it
it
in.
If you have questions, terms, topics that you'd like us to discuss, you can message us, comment on this, email us, and we can either answer it there or maybe cover a future topic for you.
We'd love to. Yeah.
Until then, it's
See
time
ya.
to say cheers.
Cheers.
Cheers!
And now the awkward pause while I go shut everybody off.
We'll just drink.
Bye.